What is up, everybody? And this is episode 10 of the Trading Floor podcast. I'm Jay.
I'm Christy.
And we're very excited to be bringing y'all this episode 10, one might say.
10? Dice?
10.
What's the... Oh, no. Don't even... I'm not even going to fall for it. I'm not going to fall for it. All right. So, welcome to episode 10.
We are a PG podcast, so I'll just leave it at that. But for everybody that knows, they know. They know you got, but that's okay. That's okay.
All right.
But guys, this episode is going to be just as fun as that joke that I unfortunately couldn't land. And we're going to be talking about risk management. Yeah.
Woo!
Risk management.
The crowd goes wild. They're like,
the crowd. And there's one person in the crowd, and it is a cricket.
They are stoked for risk management. Yeah. So I know we lost everybody on that intro. So they're like, yeah, next.
All right.
Episode.
See you later. We'll wait until next week.
No, we won't make it too long this one because we know it's not the most exciting topic to talk about. And we talked about this last week with you guys where we're still in strategy war. So this is week 2 now that you guys will be watching this. We are recording this ahead of time because we ourselves are in strategy war. So you might notice we look exactly the same as last week. But that's because we're trying to record ahead of time so that way everybody can actually trade throughout strategy wars and trade without being disturbed. So we haven't brought on guests, and I apologize for 2 episodes in a row that are like topics. But risk management is important, and we'll try to keep it short and kind of just talk to you guys about why risk management is so important versus just high win rates. So that's the thing that we see a lot. A lot of people complain to us, newer traders will complain that they want higher win rates. And don't we all? But the reality of it is having a high win rate really doesn't matter if you have good risk management. You could have a pretty shitty win rate. We've seen some pretty bad win rates. Like you could be like, I think if you're going for certain rewards, like we could see 30s and 40s for win rates, and you could still see a pretty good amount of profitability if you're a reward that you're going for as well. Like
for example, for me, when I passed my first prop firm, my strategy that I literally back tested was about 43 to 44 win rate, but I was going for 2 reward. So, and I was able to make like 12% in like 1.5 months. So,
exactly. So that's not that great of a win rate. So a big misconception. No, it's not. But congrats.
No, it's okay. No, whatever.
But that reward, that's a sexy reward you had there. So does that help? Try and buffer the blow. No, the win rate sucked.
I feel much better now. Thank you.
With that reward, yeah. And that's
that reward though.
That's where you're getting all the ladies with that reward. All right, but yeah, so. The point is that with the risk to reward situation and then higher win rates, like we want to break that down and how that really how it should be looked at versus just being so focused on just having a high win rate. We've also seen the entire different opposite where you could have a 90% win rate, but if you have really bad risk management, like say you're over risking or over risking and over leveraging, God forbid, and you take one loss, and your system isn't set up a certain way, even one loss could be super detrimental to you, even with a 90% win rate. So, and you could still not be that profitable. You could have we've compared the two. It's
win rates don't pay the bills, guys.
Yes. Exactly. Win rates don't pay bills, but risk management does. So it's important to understand that idea of it. And also, I think that when you're talking about having high win rates versus having a good risk management plan and prioritizing the risk management over the win rates, what that helps for a lot of traders to do is to realize that it's okay to lose. I myself take losses. Jay, we all take losses. Nobody's perfect.
I took a loss yesterday.
I did. But what did you do the day before?
I made 3%.
So how much did you lose yesterday?
1%.
So how much are you up on your account?
And then I made another 1.5% today. So
okay,
I made that back.
But yeah, so you guys get the idea though. But the point is he made 3%, so he took a loss yesterday, but who cares? Because he's still up, he's still in profit. And that's the idea, is not being so hyper focused on like, oh my God, I took a loss. Like, forget this strategy, throw it out. It's junk. Forget this risk management plan. It's junk. Like, it's not junk.
Oh, I've
It's
lost like 4 or 5 in a row. It's over with. I mean,
right.
even for my system, like it depends. Like there's calculators that do this for you, but with like a 44 win rate, you could see 8 to 9 losses in a row potentially. Like
Yeah.
there's nothing stopping it from you winning, even if it's 44%. Like there's nothing stopping you from winning your first 44 and then losing your next 56, or even vice versa, where you go on a 56 losing streak to go on a 44 win streak. That's still 44% win rate. Even if you have, so in your back testing like a 60 win rate or 70 win rate, you could still see 3 to 4 losses potentially in a row. And you just might be, it might just be terrible timing for you where you enter the market whenever that's happening. And it's different because in back testing, it's so much easier to like look at losing streaks because it's like, oh, it's instant. And then you could see at the end of the month, it's like, oh, like I made it back, like whatever. But whenever you're live trading, you're living within that 3 or 4 losing streak. So it affects you even more.
Yeah. Um, as Jay's saying, like that's definitely something that mentally could kind of mess with you a little bit, but it's important to realize that when you're doing it, like you don't need to worry about that win rate so much. You need to be worrying more about your risk management and sticking to that and not swaying from it. Because another thing that happens is you'll do all of this. You'll know that risk management is important because you listen to our podcast and you're like, oh, Christy and Jay said, don't worry about the win rate. Just stick to a good risk management. And you listened and maybe you applied it and whatever. But then you get into the live market and you're trading it and you like get those like like the fingers, the fast fingers or whatever, what do they call them? Not fat fingers. I forget what Artie calls them, but anyway, he calls them, but it's basically like where you just cannot help but move your stop losses around. You can't help but move your rewards around.
It's
Like
like, where are you
you
getting
just
to?
have to touch everything. They're like a little kid, like you have to touch and play with everything. And like, oh, like you see one, like say you're going for a buy and you see a good bullish trend, but you see one bearish candle just print and you like panic and you're like, oh, it's going against me and I had to change my everything. And like all of a sudden now, your whole risk management is all messed up and screwed up because you moved everything around and then you close in a panic and you take like, I don't know, 68 cents for a reward. And you're like, should have had like $200, say,
Yeah, and then you
and
keep
now
watching it
everything's
after it's
messing up.
closed, and you're like, oh my God.
Yeah,
Oh,
shoulda,
just
coulda,
had hope.
woulda. Yeah. So my advice is that you guys really learned the importance of sticking to that plan and like having the risk management actually being stuck to, because when you do things like that, it will mess up the overall strategy and plan that you have. So you don't want to constantly be like closing out trades too early or, freaking out about like what the market's doing. Like you have to learn a little bit of discipline here where you're going to set it and forget it if you can, the best you can. It's hard. Even I struggle in the 1 minute. Jay knows. We've talked about it before jokingly. Like even I struggle watching trades. So and this is years and years of practice and patience and discipline. So like if I struggle, I know that you guys have to be like shitting your pants over there watching these charts because like I get pissed off and struggle
I
with
changed
watching the
my
1 minute.
pants 2 hours ago.
But I'm just saying, you guys, I know, I understand, and I really truly do get what that feels like. I mean, I have that problem too. And something for me when I was learning to cope with that problem of touching and tampering with my risk management plan was learning how to truly set it and forget it.
Yeah.
And if you can't do that, like if you just cannot in your head do it or you can't walk away, I had to learn to go up higher time frames. So I started using the 15-minute time frame because it takes a lot longer for those trades to play out. And I like physically just couldn't sit and stare at the chart all day long at that point. Like I had other things to do in my everyday life. And it would force me to set my trade and like forget my trade. You don't want to forget it altogether if it's part of your risk management. For me personally, things I do is like set alerts when it's approaching my take profit area so I can look at it and see if I want to maybe, trail or do something different with it. And that's up to you guys and that's optional to do. But the idea was that I still never broke my risk management plan. Like I never sat there and closed out a trade, way below my reward of what I should be getting according to my plan in order to make sure that I'm covered if my next trade is a loss. So it's like a way of securing your capital. And that is important. And that's where I think people get a little bit confused when it comes to risk management control versus like high win rates. Risk management will help you secure and protect your capital. So that way, when you are making profits, although it might not be as exciting as a high win rate strategy, and it might not be as like fun to watch, risk management, good risk management is going to help you long term be more sustainable when it comes to actually making like a profit turnover, building that capital slowly so that way the more you build, the higher your rewards can become. Not as flashy as high win rates, not as quick of turnovers, obviously.
Yeah.
And no, I'm not knocking high win rates. If you guys can find them, by all means, like trade a high win rate strategy, but just make sure that you're implementing that really good risk management still too. Like you have to have a strong risk management plan. That is the priority over any win rate. That's my take on this.
Yeah, and I went through a journey of my own. I kind of knew I had an engineering mindset of it to where I kind of wanted everything. I wanted my hands off. I didn't want those trigger fingers. That might have been what Artie was kind of looking. Maybe Artie
Maybe
says,
that was what I'm thinking. I'm
yes,
brain farting today, guys.
trigger fingers.
This is a long day for Jay and I. It's been a busy couple of
Yeah,
weeks.
so
And we're like trying to get this content, but we are like Jay's brain farting in the last episode. I'm brain farting in this one. So I apologize for all of our farting. But we
it's
are getting
very
through these
stinky.
episodes.
But it was a simple fact that I knew that I would probably struggle because I knew learning trading that I couldn't stop looking at the markets. And I kind of did something similar to Christy in the fact that I went up to the 15-minute. But I did start on the 4 hour, I will say. So when I went to the 15-minute, I'm like, whoa, this is kind of quick. Like I don't know if I'm ready for this. But I mean, people nowadays start on the 1 minute and they're wondering why they can't be profitable right now. So it's like you're fighting a downhill battle like before you even start, but that's besides the point. That's not about today's episode. But I knew personally for me, I like to stare at the charts, and so I needed to make a set and forget strategy. And so that was my main focus of it all. I didn't really want to go that high of a win rate. Two is kind of the middle ground, but I knew that whenever I tested 1.5, it just the win rates weren't high enough. And then when I went to 2, then I'm like, okay, the win rates are around 45. Sometimes it would touch 50. I was like, this is awesome, but it ranged anywhere between 40 to 50%. I'm like, okay, I know that if you go for a 2 reward, if your win rate is at least 33%, then that's break even. And so as long as I stayed in the 40s, I was good. And so just for reference, like if you're using a 1.5 reward, it always, then a 40% is break even. Obviously a 1-to-1 is 50 win rate. Even if you start going even lower, like 1-to-3 is like a 25 win rate. 1-to-4 is like a 20 win rate. But anywho, I started off and I made basically a completely mechanical strategy. I had certain confluence that had to be met, and once they were met, I'd enter the trade, set my stop loss to a swing, go for 2 reward, and then I'm out. I wouldn't look at the trade because that was my main problem for that. And as I've developed, as I looked through trades, I understood like, okay, losing is gonna come into play. And so my next step was I wasn't really in the right space yet to start like kind of drawing levels and understanding like, okay, I wanted to target 2-to-3 reward, but this level's getting respected at 1.5. I should probably take out around this time. I wasn't in that mindset yet because I didn't want to add more things to it. And so what I decided to do was with an old strategy that I used to use, I would just simply set a 1-to-4. I did not care about losing. I was like, oh, I mean, I just have to be right 20% of the time and I'll come out completely break even. I saw like 7 loss streaks in a row, but then it would follow up with like 2 wins. And those two wins literally cancel out all 7 losses and I'm up 1%. I'm like, oh, especially there was like endorphins would kick in. Like that first trade you take, you get 4R, and it's almost like you have a buffer. It's like, oh my God, like I could lose 4 trades in a row now and I'm completely scratched. Like everything's even. And then if I win 2 in a row, I'm like, yo, I'm done for the month. Let's go. But that was kind of the next step for me, risk management wise. And what I recommend for you is figuring out your personality. If you're able to be more of a Christy where you can control your emotions, then you could be more logical about things and say, like, okay, this support and this resistance is being well respected. While I would like to hold it longer, maybe I should look to close this trade, go stop loss to break even, maybe even take partials.
Mhm.
If you're okay at looking at a chart. But majority of us starting out, that's usually not the case. As much as we would like for that to happen, emotions will kick in, fear, greed will consume us. And usually I would say for majority of beginners that a more set and forget style is really good for you because it can get very toxic for you just to watch your stop loss just getting drilled.
Yeah. So I will agree with that, that, for me, even I struggle and I get annoyed. I don't want to say struggle. Like I don't change my plan because of it. Jay's heard me. I will wait. I'll just yell at the screen a lot, until it
Yeah,
hits
my
me take
my
profit.
ears start to bleed.
Um, I just get
Certain
mad when it like,
confluences, you know.
and my this is a side note, but my gripe is that because I have to trade on MT4 since I use unregulated brokers, um, TradingView and MT4 are never exactly the same. And like, I mark on TradingView. So like when I like peek, like I peek at TradingView more than I do at MT4 to see if it hits. So that way I'm not tempted. Like I know my flaws. So I'm not tempted to tamper. I don't try not to look at the numbers. And that's a tip of mine is like I don't actually watch my MT4 all that much. Like I don't like to see the numbers moving. Because then I have found in the past that when candles do print or I start thinking I see things like, you will talk yourself out of it
Yeah.
inevitably. So I have learned to not watch and focus on my MT4 screen so much. I will peek at TradingView though to see like, did my markup, like is the market moving towards my area or whatever, or my take profit. And my gripe with them is just that they don't match up perfectly. So on TradingView, a lot of the times it might look like, oh, my TP's hit. And then I check my MT4 and I'm like, no. And then like it
No.
like always of course like because I am a zone marker, if it hits a zone it almost always rejects a little bit, so like I'll get like this happened the other day, like I was in a sell and it hit my 1 hour zone, but it hit it on TradingView but didn't, it was like I don't know, I think 20 or 30 points or so off on actual MT4. So I was just so mad because I was like, great, it's gonna hit the 1 hour and it's gonna push up, which means now I gotta wait for it to like break through again. Like, so it's just like little things like that. That's even for me, I still get irritated with. And those are the ways that I kind of go about it. Like I try not to hyper focus on MT4. I still stick to it, but yeah, it takes a lot of discipline to do that. And there's times where I've even told Jay, like I was like, oh, I'll
No,
be
let me get
honest, like
it.
if I wasn't in the competition, I probably would just close right here because for me, real money is real money.
Yeah.
Whether it's $200, like I'm holding
You
for
can't
extra
go
or
poor
something.
taking
Yeah.
profits.
So, but that's not. I'm at a different place, so I don't want to tell you guys to do that. You should be waiting for your trades to play out. Um, but I still struggle, like Jay said. The other thing that I would recommend, and I know when we say move up a higher time frame or like something where you can't sit there and like hyper fixate on what's happening. The other thing that I would say that has helped is if because people argue like, how can you learn if you're not, they like watching the charts move because they want to learn. You want to learn the market moving. How does it move? What should you be aware of? And I get that. I totally understand that. I used to spend hours and hours sitting at the charts watching them. Even on pairs I wasn't trading just to learn. And you should do that. You should be spending time practicing, the skill and learning the market. But my advice is that when you're placing trades, if you're one of these people, is that what you do is go back in time, let them play out, mark them up, keep your markups for the whole week, and then go back at the end of the week, go to your replay button and just let them play out. So like however fast you can speed it up if you want, but like let it play out. So you're watching a moving market and you can see where things are going right, wrong, what you could have maybe done different, what you did right, like whatever you want to do, go back and do your weekly analysis with the replay mode on. So that way you're seeing how did the market move. That way you're still getting the benefit of a moving market and an analysis, but you're not hyper fixated in a live market watching your trades where you might be tempted to tamper with them and mess up that risk management. Those are some of my tips.
Yeah.
That's stuff that I had to learn how to do because like I said, I was one of those, what did we call them? What fingers? What were
Trigger,
you?
trigger
Trigger
finger.
fingers. Trigger fingers. Yeah, I guess I was
Oh
one of
God,
those.
no finger. No, you didn't. You didn't see the finger guns. Oh gosh, we're banned.
Canceled. We're
We're
canceled.
banned.
There goes the podcast. 10 episodes though. Look at us.
Hey, look at us.
No.
We almost, well, 9.5 kind of, because we almost made it.
Almost so close. Anyway, joking aside, you guys, that is where, I mean, that's kind of where we're at with this episode. Is we just want to talk a little bit about the risk management, the importance of it versus the win rates.
Yeah.
I do personally have a pretty decent win rate. I tend to stay somewhere between the 80s to 90s.
And today,
what about it?
80s, 90s, and today, like the radio.
The hits, 80s, 90s, and today's hits. Yeah. So anyway, I tend to stay somewhere between the 80s and 90s, and people are always asking, like, how do I get those high win rates? The strategies we show don't have. Yeah. Obviously that just comes with experience, patience, knowledge of the market, the process like that I've gone through. Go watch episode 9 if you haven't watched it already. We talk about like the whole idea of this process versus sprint, this marathon thing. It's not something that happened quickly for me to be able to get to these win rates. I, for a very long time, was like Jay, where I was just trading along with like a nice 50-60% win rate, but I had good enough rewards that it was fine.
Hey, pal. I don't like all these. Hey, I was checking. I was checking my thing. I think I'm in the 70s right now. So how about you shush?
But you are getting better. So I mean that just helps to validate my point, which is that back when you started, you were settling for lower win rates, and as you gotten better as a trader, you are getting more experience, and you're adding in certain analysis.
Taking way less trades.
Yeah, when you started, you had no analysis in your process. You guys don't know that strategy too well, but he didn't need it. His it was full probability that he broke down and went full on nerd out engineer on it, and it was really cool the way that he did it. But it worked. But now that he's been trading for a while and has some analysis, has learned price action, has been forced to work with me and do things that push him out of his comfort zone.
Worst.
Push him out of his comfort zone, and has gotten better at doing that, like kind of stuff. He's been applying it to his trading, and you can see that. Like now you're in the 70s for your win rate so far, and you're still early on in that challenge, so that might change. But hopefully it'll go higher.
Oh, I was gonna say, wait, you want it to go down?
No, I think it'll go higher. Actually, I think I say I'll compliment you on here. I tell Jay all the time, I think that his trading is actually a lot better than he even gives himself credit for. I think his analysis is a lot better than you realize. Sometimes you don't know like how good you are because of how much we do with the community. So it's like we're constantly practicing, even if it's stuff we don't trade or look at. Like we're constantly being exposed to things or information.
That, Chris.
And I think I definitely. I mean, I told him I think he's progressed a lot as a trader.
I think it's vice versa for Christy. So
I'm going down. I agree. No, I have taken a step back with my trading to an extent, and it was on purpose. I knew it when we started TTF, and I knew that my trading would become less than what it is now. So it's and so it's been a struggle for me, which is why I love strategy wars. Actually, I love the idea of these because every couple months I have to do it, and I that's what I need. I needed something to push me to say like you have to get up and do this and trade. And I
haven't been waking up at 6:30 in so long. I've definitely feel the effects right now, and so but I'm doing it because that's literally the only time is like early in the wee hours of the morning I have time to do this. So I'm trying to make it a routine of mine. That way it just becomes habitual.
Yeah, I mean that's the thing, and like I mean this isn't really about being habitual or anything, but we'll talk about it. Just even for me, like I had certain Discord hours, but like trying to figure out how to trade and do Discord hours and record and do all the content we do, like it's been a lot of like multitasking on my end too, and Jay's as well, trying to figure it all out. And it's a good thing though. Like I love strategy wars. Like I get excited because I know every couple of months, like I have to sit down and like really focus on trading. Whereas in between, then what's nice is like I'm making enough on those months that in between the months I can like do like once a week or something, sit down and like make a really good trade once a week or so, and then be good. And then wait it out till strategy wars to like do a trade every day, which has been fun. So anyway,
And
my rant here is that
as we talk about this too, like kind of developing what time best suits you, that is technically still risk management in the sense,
mhm,
because if you don't have a consistent time that you're trading, or if you just back test like 24/7, that doesn't really help you. Like you
no.
should, like like I
Well, you
and
should
Bear
back
and
test
others,
24/7, but you need
if
to pick
if
out
you
what you need from that. You shouldn't trade
if
24/7.
logically you only have a certain amount of hours a day to trade, there's
Right.
no point in back
Oh yeah,
testing
yeah.
other things. Like you can be using your time way more efficiently. Let's say you have the first 2 hours of London. Like that is your 2 hours that you could trade. You can literally backtest so much data going back, just focusing on those 2 hours. Just have a sessions indicator. We have a simple sessions by TTF indicator for free on TradingView if you want to use it. But you literally just highlight a little session and you trade inside the color every single day and you go back and back test it. It's very quick. And that's very important, is to set a time to trade and stick to that. Because if you
Mhm.
back test that certain time, but then you're like, oh, like I'm free like this time, it was like you never tested that. So if you potentially have the opportunities to trust, if you have the opportunities to test multiple sessions or multiple times a day, then yes, backtest whatever you potentially could be trading. But I would say if you're sleeping during Asian time, there's literally no point in backtesting that. It will
Yeah.
alleviate a lot of trades for you and a lot of your time, so you can only focus on certain things yourself. And so kind of wanted to go circle of life kind of back onto the topic here. And I just want to finish on the simple thing that we have gone over, that don't get so fixated on all the spammy YouTube videos saying 100% win rate, this or that, because they're just trying to get y'all to watch their video half the time, guys.
They're making money off your views, and that's what they want. It's
There
clickbait.
are there
Yeah.
probably are some indicators that'd be like, oh, this looks like an interesting indicator. Maybe I could check this out, or maybe this is an interesting concept of looking at the market. Maybe I could check that out. But win rates don't pay you out. It is percent gain. And
Yeah.
even then, whenever people are spamming, oh, you could make 100% like that month, but what could be the drawdown? Like, unless you have some ridiculously high win rate and really good risk management and make like ridiculous numbers that month, if you're making a lot of percent gain that month, there's a good chance that you're risking a decent
Too
amount
much.
as well.
Yeah.
It might not be too much. Maybe it's in your plan, but it's most of the time it'll probably be too much. So I would say the least regarded stat that nobody ever really cares to look at, which you should honestly focus on, is your strategy's drawdown. How many losses could you see in a row? Because if you can minimize that specific stat, you are
Mhm.
going to do amazing. You're going to be
Yeah.
able to pass all of the challenge, no, not all of them, but you'll pass a lot of your challenges and you'll be able to build up multiple accounts. And then at that same instant, you don't have to trade every day because you have multiple accounts now and you're able to place one very quality trade that you've been looking at for a couple weeks, or maybe a couple days, couple weeks. And that one trade will, I mean, that one trade will be good for you. You don't have to sit down and spam 10 trades a day. That one trade could literally be it for you because it's copying
Yeah.
on all of your accounts. So drawdown
Um,
is the biggest stat that nobody ever talks about.
yeah. And that's like something that I've what Jay just explained is something like I do a lot in the off season of strategy wars. Especially because like I said, I've had to learn how to, for me even, like change myself from being somebody who trades probably like 3 to 4 times a week to being somebody who trades maybe 1, maybe 2 times a week now during off season of strategy wars, which has been a change. So there's times that, like, I love the 15-minute time frame, and there were times where like I wouldn't necessarily go what I want. So I'm having to go up to the 1 hour. And I actually just did this in Strategy Wars. Well, this is a week later now, you guys, but last week, those of you guys in the Stairmaster room, you guys were asking about a 1 hour markup you had seen in one of my testimonials. And I didn't submit it for Strategy Wars. It was based on the Strategy War the Stairmaster indicator, sorry. But it wasn't I submitted to Jay because I had already closed out smaller profits for that day. You can go see it, Jay. It's in my MT4
I'm
terminal, which will
watching
pop up.
you.
and it was marked up. I didn't mark it on there, but I didn't submit it as like a hold trade, you know, but I was holding it and I was like, you know, holding it for a couple of days, and it was a 4 hour level that was, you know, being used in a 1 hour time frame. I was entering it on, and that's something that I, you know, Jay knows I'm on my personal account. So I was like, all right, well, this is my personal account. So like there's still a style that I'm trading and a plan that I stick to. So like I'm still going to use my regular style. And I, you know, I'm going to do that. And then strategy wars, you know, I will start to, it's only, you guys are watching this a week later, but it's only day 3 for us. So like I need to still get myself back into like out of my old trading process and into like this like
We'll
month,
like keep
like
waking
every
up
day.
at 6:30 a.m. every day. Find
We'll
out.
see. But as Jay was saying, I want to just end with the where he was talking about the losses. That is something that is extremely important and does fall in your risk management. Like you have to learn to set losses. Backtesting, yes, find out what is the potential. What is the potential amount of times your strategy and the amount of backtesting you did, like how many times could you potentially lose?
Yeah.
Then you need to look at that and say, can I actually lose that many times? You don't have to lose that many times. Set a minimum loss for yourself for the day and be like, I'm done. If I see 2 losses for the day, I'm done and I'm out of the market. That's what I do. If I lose 2 losses in a row, I'm done. I'm not going to keep trading. And I have seen like way more losses in a row when I personally backtest the stuff that I do. You know, I think I've seen the max of 6 or 7 in the last version of my backtesting that I personally like marked up and did myself. So I know that there's a potential to have 6 or 7, you know, and
that's exciting.
That's outrageous though. Like
but
I'm not going to go 7% negative. So I needed to look at that and say, okay, but what am I actually willing to go negative?
Yeah.
And like, you know, and I said two trades in a row in a day and then I'm done. Like if I get 2 losses in a row, I'm not looking at the market anymore. So I do want to kind of stress that point too before we wrap up. Like part of risk management isn't just making sure you have a decent enough reward that will like work with the win rate that you're getting. It's also making sure that your drawdown, like Jay said, that number is extremely important. And then learning how to analyze all of it when you're looking at this and saying, well, what do I want to pull from all of this data and actually put into my specific trading plan for you during the time frame when you're trading, during the hours or the pairs that you're going to be trading. Like, what is your goal? To pass a prop firm? If it is, make sure you understand the rules of that prop firm. If it's just for your own personal account, you obviously can have a few more losses, but like, do you really want them? Like, you need to think about that too. Like, I can have a lot of losses on my private accounts, like that I'm trading, but do I want them? Like, you know, mentally that messes you up still. So I still always stick to this like 2 losses a day.
On this podcast.
Yeah, well, we do. Jay loves them. But we like to be realistic about it. I think that it's important to talk about losing because not a lot of people like to bring up, it's like taboo to talk about losing. You only ever talk about how you did so well and all your wins. And that's all people ever see, which can be really hard for people who are stuck in a rut with losing. And the reality of it is everybody loses. People don't post their losses.
True.
Nobody's like, yo, check out these L's. Like nobody does that. Jay does. Jay loves to be like, and we got a loss. Way to go. But like other than that, nobody does that. Yeah, and I mean, I think
who cares? Like
we
you're gonna
joke
lose
about it.
You're gonna lose. Like,
we joke about it because we're so we're almost like just numb to it. You know what I mean? Like Jay and I are just like, oh, it's a loss. Okay, next one's a win. Next one's a loss. Like,
sometimes
it's very mechanical.
Sometimes I cheer price to hit my stop loss. Like, you know, like reverse psychology. You know?
Yeah,
it's crazy.
but I mean,
that's just next level. That's next level trading, though. Y'all aren't there yet, but y'all are getting there. Don't worry. But
if you're not there yet, don't worry about it.
You're gonna be like cheering on, and Chris is like, "What's happening? You take profit?" Like, no, it's almost hit my stop loss. Let's go. She's like,
Jay
why?
just likes to joke around. It helps him mentally. Like, whatever.
Like,
whatever works for you guys.
Why?
No. Anyhow, you guys, all I want to say is like make sure that you are looking at a certain number of losses. Even with strategy wars right now in some of the rooms, I'm seeing some people take probably too heavy of losses to try and secure profits. And I get that the game can be alluring, but that the purpose of Strategy Wars is to not teach you bad
Develop
habits.
yourself.
And you don't want to learn that as a bad habit. You want to learn how to cut yourself off and get that discipline. And that will help as well, to learn to just be like, I'm done and I'm going to walk away. Because more than 2 losses in a day, and I promise you, you will start to see things. You will force trades. You will start to revenge trade. You will over risk. You will do things that you do not want to start doing. And it will just spiral. It will not end well if you start going off from your plan. So take your data, look at your risk management, analyze it, put it all together into your specific trading plan for you. Figure out, what do you realistically want to do? How much are you willing to lose in a day and potentially go into drawdown? And then work with that. Apply it to yourself. So that's my advice on that. A lot of times we will give a suggested risk management, but at the end of the day, you guys, risk management is very personal. And it's something that you have to figure out, what is it going to work for you. Your trading plans are very personal. I can't make you a trading plan. Your trading plan, you can't copy my trading plan. Yeah, well, I mean, we have like looked at it before and we've done things like this, but like, it's never going to benefit you unless you do it yourself. And that's the reality. And make sure you're doing your own back testing. Like Jay said, when you're like, we back test everything, which is an absolute nightmare. But like, when you guys are doing it, if you only trade 2 hours on this day and this day, those are the only 2 hours during this day and this day that you actually have to
unless you're curious to be like, unless you're more flexible, you're able, like, which would be a luxury if you're able to kind of map your life around trading, not
if you
vice versa.
are, in that case, we give a lot of stuff for you guys to kind of take as like basics to build upon, but you still should be building upon that, like with your own markups and adding in your own concepts, whatever you like, price action or smart money, or if you just want to do it kind of more like algo style, but still like putting it on your stuff and running it.
That's all we ask. Like, if you know that you can only, like we keep saying, if you can only test or you can only trade 2 hours of whenever indice opens, then just backtest that specific time. There's no point in going further.
If you're never going to change your schedule with it, don't drive yourself crazy and then get yourself so like in a place where you're like, oh, I hate doing this. This isn't worth it. Like, just do it. Be efficient. Like you just need to be more efficient with it. Get more data from it on as many pairs as you can during that time frame. It would be my suggestion. Not trying to get like sessions you're never going to trade. Just figure out what is the best, or maybe work with different settings. So like tweak your settings, something, figure out what like works a little bit better for you. That's all stuff that you guys got to kind of work with when you're creating these like trading plans and stuff like that. But the plan should always be focused more around your risk management and how you're going to keep that sustainable versus just finding a high win rate. A high win rate does not guarantee you anything. The high win rate will come later on after you've done all your testing.
But Chris, I will say, what's guaranteed?
The end of this podcast.
The end of this podcast. Yes. Guys, we really appreciate y'all listening in on this podcast. Episode D's.
Crazy.
Episode 10.
It is not these.
That
I ruined
that
it for
is
you.
10 in French.
That made me feel like really good.
It was 10 in French, but don't.
All right, you guys.
Guys, really appreciate y'all. Like always, make sure you like our podcast, and especially on YouTube, subscribe. And then if you want any,
cameras go crazy.
Do you mind? I'm like doing the outro. do you mind? If you want to, for some reason, engage with this individual on the side of me, then feel free to drop down below and click the link to our website, trdfloor.com, and maybe think about subscribing. Who knows?
Yeah, we're over there if you guys are interested, along with Artie, Brutus, Roxy, Hawks, Bear. Everybody's over there. So if you guys are looking for any of us, we're all over there. That's where you guys can find us. That's where you can talk with us, like one-on-one or in the chat rooms or whatever. But I think that's it for this episode, you guys. I hope that helped a little bit. It wasn't that interesting, I know, but I just really want to, I think we really wanted to drill in, trade plans and risk management. Focus on that. Don't get stuck in these videos with these high win rates. They're all just a gimmick at the end of the day. The win rate will come after you've done your testing and you have a risk management and you perfected it. So best of luck, you guys. I would love to see how long Jay can hold that pose for, but I'll end it here.
Bye.
I'll see you guys.
She won't stop. Bye.
I am stopping. I'll see you guys in the next episode. Good luck to everybody who's in Strategy Wars. I hope you guys are killing it still. Bye.